Ladies and gentlemen, digital core REIT, where most analysts and most investors have touted as a good stock, has crashed. Yes, the share price has fallen 41%. That is actually a whopping 41% drop in the share price since its high of 125. In today's video, we will analyze essentially how you could have avoided it, what were the warning signs, and if you are a trader, of course, it's smelling nice with the share price down 41% as it is. This, ladies and gentlemen, you can see that the share price have actually fallen by 41%, down from 125 down to 74 cents yesterday. Ouch! It hurts really, because if you had invested, you had confidence in the analysis as well as actually the predictions of many of the analysts during the IPO. My gosh, you would have suffered a lot. Now, in our video at the IPO, we have actually warned about a few things on digital core, which has now actually panned out to be true. Now, essentially, how were we able to actually decipher that? For more of these details, please look at my last video on digital core way back in November of last year. Moving on, ladies and gentlemen, what actually triggered this huge fall, is none other than the fact that it's touted good quality assets, good quality tenants. One of them have defaulted. In fact, it's been mentioned that one of them, has actually filed for bankruptcy in Toronto, Canada. This particular customer, is current on its rental obligations. This was actually already reviewed by Digital Core, in its latest results. Now, one of course begs the questions, therefore, that was this event actually known to the management much earlier, and they only made known it at the results that came out recently? So is this the kind of REIT in terms of the spontaneity of a material event? Well, it's something for you, the investor, to actually find out. Now, the interesting thing about this is the fact, ladies and gentlemen, that at the end of it, while actually disclosing the facts without telling us essentially which is the customer, to what extent do they constitute, rental income for the REIT, and how will it affect NPI? Bottom line, after delivering the bad news, the REIT tells us that this customer event is not expected to impact DPU. Wow, ladies and gentlemen, if someone stopped paying you rental, or basically will cease on its will, now it will affect the will, no doubt, Now, how is it that it will not affect DPU? Now, of course, I think in terms of corporate governance, proper disclosure, proper guidance, the role of investor relations is to make clear, any events, whether it's positive or negative, to how it flows down to the DPU, because that is the ultimate metric that is actually presented to shareholders. So is this, as apparent as what it should be, or should it be more clear? Well, that's for you to decide. For me, I've sat on the corporate governance board of when we awarded the best companies in terms of corporate governance, as well as actually in terms of the best disclosure for REITs under the Singapore Institute of Directors, SPH as well. Now that comes under the Singapore Corporate Awards. That was way back, I think in 2017. Now I must actually confess that if this was a case that was presented, I would say that this actually falls short of proper governance, proper disclosure. So hopefully investors will be able to get something that's more clear, as we go through. But unfortunately, the share price have really taken a hit. As usual, for REITs, the key thing, ladies and gentlemen, is to be forewarned on the event and predicated, and before it hits the danger zone. As I've actually mentioned in my book, Making Your Millions in REITs, there are many, many pitfalls for the investor. But to be a savvy and smart investor, you must be able to sidetrack and each of the pitfalls. The Chinese version, which is selling very well in the US and China, it's this particular one for the same book. Now, moving on, ladies and gentlemen, you can see that one of the doubts that we raised in our class, that is actually our video, when we first did on digital core, is the fact that, we are actually quite scared that the REIT has actually put in its prospectus the possibility of it expanding from its current asset IPO size of just 1.5 billion US up to 15 billion. Wow, ladies and gentlemen, that sounds very aggressive. That sounds very aggressive, likely forward, if you are actually willing to invest with the company. I mean, it's fine if the current balance sheet and gearing ratio allows for such aggressive expansion without much fundraising from shareholders. But the key thing, ladies and gentlemen, as I've mentioned many a times in our past articles, that past REIT financing via private placements or preferential offer has not been too beneficial to shareholders. And you can look at our record at GCP Global. You notice that we track those companies that have lost money for you, at preferential offer as well as institutional placement. So if you're a smart investor, you notice that you follow us closely, you would have avoided all this altogether. Now, ladies and gentlemen, if you have watched this wonderful movie, that's Top Gun, now the high song is the Highway to the Danger Zone. Now, in REIT, in our classes, when we actually, you notice that essentially our modus operandi is to ensure that when you have been brought to the danger zone, you know how to swim and actually avoid the pitfalls. But most importantly, the whole idea of investing in REITs to have a safe, stable, consistent return. So why go into the danger zone in the first place? That's what we do at GCP Global in our classes. Now, the other thing, of course, on digital core, which we have highlighted, is this, that the loan portfolio that I have is 350 million, but you know what? They have only hedged 50% in fixed rates, which means that if the rates, which have already gone from 0% last year when the company IPO, now to 1.75%, and possibly looking at the dot plot of the Fed going up to 3.4%, by the end of this year, and 3.6% of next year. I don't think you need to be a very smart guy to know that the gearing ratio of this company, of this particular REIT digital core, will be affected quite severely than what is actually being guided. So these numbers may not be as good, may not be as solid as what it seems to be. So for more of this REIT, as well as, knowing whether it's actually a time to buy, do read our articles at GCP Global website. But even more, if you want a proper deep analysis, we present to you in our class on 13th of August, which is a live class. Is actually held at PLQ3, and you can ask all your questions that you want, because by then maybe the share price may be smelling of good returns, even for a good trader. Remember, a good bet at the right price can make you a decent profits, that they set you up in life. So avoid the danger zone and join us in our class. And once again, like our video and subscribe to be our subscriber.